Well, hey everybody, Rob Satcham here from feedbackwrench.com. We help small businesses go from good to great. Now we do it in marketing, consulting, and web design and different things like that. But we exist to help businesses maximize every effort and investment that they put into their small business, which is why we create so much content around saving in taxes, maximizing your investments, and helping you, pay your fair share in taxes and not a penny more. So in this video, I want to talk about what are 3 reasons why you, if you're a sole proprietor or an LLC, should look at becoming an S-corp. So 3 reasons why, if you're a sole proprietor or an LLC taxed as a sole proprietor, you should look at becoming an S-corp. Now, we've done a ton of videos about this. This is a little bit newer information with a little bit different take. So the first reason why you should look at becoming an S-corp is you save a ton in taxes, right? Go look at our other videos. When you become an S-corp, you're going to want to only do it if you have net profits north of about $40,000, because there's some bureaucracy and some, you're going to need a payroll system. You're going to need good bookkeeping. Your tax returns are going to get a little bit more expensive, but you can split your income and only a portion of it is subject to self-employment tax. Self-employment tax is 15.3%. So the first reason why you're going to want to convert to an S-corp or being taxed as an S-corp is because you can save a ton in taxes. We do a lot of examples where when people make, $50,000 to $100,000, they can save between $5,000 and $10,000, $12,000 a year. When you do the future value on that, it's huge. So you can save in taxes. Check out all our other videos to understand that. But the second thing, if you go from being a sole proprietor to becoming an S-corp, your company can be an asset in retirement. Think about this for a second. So I meet a lot of entrepreneurs that are baby boomers, and they often think, when I die, my business is just going to be done, right? That's not true. If you're a sole proprietor and you were to pass away, actually your business would just disintegrate. It'd be gone, right? And if you were to retire, that entity ends with you. But if you become a corporation, the idea is that there's this entity outside of yourself that now exists, a corporation, right? Now, what people do is they start thinking, wait a minute, my business has this great reputation. I have a list of customers. I have a list of vendors. This creates value, and it creates value in a matter that is predictable. And because of that, there's no reason why this system and this organization of people that do work and this reputation that I've built can't proceed. Now, I know a lot of retirees say, I don't even want to think of work. I don't want to think about my company when I retire, which we get that. But if you're a sole proprietor, you don't really have any options. If you become a corporation, you would have the option to maybe find an apprentice before, or find somebody who wants to come in and you could pay them a higher salary. Your participation in the business could become very nominal, but your ownership stake can be still full, which means that you won't have to take much of a payroll because you're not really participating in the business. You're just owning it, and you can take your dividend then. So that's the second reason, is when you enter retirement, if you do the right strategic and tactical matches to allow your machinery of a company to keep going and creating value in the market, then you can live off of your business. You can continue to take those draws and owner dividends. So that's the second thing. Now, the third thing is it can help your heirs have an asset. If you become a corporation, instead of just being a sole proprietor, your company can be an asset to your heirs. Now, a lot of people don't think about this, but if you're just a sole proprietor and you pass away, your business technically dissolves with you. But if you become a corporation, then you can establish systems and processes around your reputation and your ability to add value, right? Perhaps find an apprentice or find some partners to come in to run this outside of you. But the bottom line is that your company can be an asset either to your heirs or to somebody else when you become a corporation. Maybe you don't want to give your business to your kids, but there might be somebody who wants to buy it from you, wants to have that reputation, maybe that name, your customer list, your processes. All of that has tremendous value to it. And if you're a sole proprietor, it kind of goes away. But if you're a corporation and you've done some work around this, it can go on and it can live past you. Maybe you care about that, maybe you don't. Now this brings up my last topic. Any asset that doesn't have a beneficiary to it, such as life insurance, an IRA, a 401k, anything that doesn't have a beneficiary to it, if you pass away, it gets shoved through what's called probate. Okay, a lot of business owners don't understand that your business is a kind of a complex asset for when you pass away. Now, what I'm urging you to do here is don't rely on a will. If you own a business, please talk to an attorney or find a service that can get a trust written up for you. Now, if you just rely on a will and you don't have a trust, when you pass away, all of the stuff that had a beneficiary on it, like life insurance, your beneficiaries get right away. Your IRAs kind of take a while because the will has to go through this probate. And probate, basically, these attorneys take the process, charge the estate a whole bunch of money to allow creditors to come in and claim their money if they need to. So it's a very public process and it takes forever. Whereas if you had a trust set up, your wishes could be executed very quickly and you can avoid these probate costs. I've seen it where probate, somebody didn't set up a trust. They had some farmland and a house and a couple of other things that weren't as plain as a beneficiary asset. And they got charged, $10,000, $15,000 worth the attorney fees for probate. It was disgusting. Where if they just would have spent probably $2,500 with an attorney for a trust, it would have been much faster, much easier for all of her heirs, and they really would have appreciated that. So all I want you to know is there's 3 reasons why you might want to become an S-corp. 1, you'll save in taxes. 2, it can provide retirement income. You can set that up. It requires effort. It's not that easy. And 3rd, it can become an asset for your heirs, and somebody could buy it from your heirs perhaps, or allow that machinery you've set up and all your hard work to go on and add value to other people's lives. I think that's really important. And then underpinning all of that is if you own a business, whether you're a sole proprietor, particularly if you're a corporation or an S-corp, please don't rely on a will. Make sure you go in, talk to a business attorney, talk about what kind of trust you should have, and figure out this stuff so that your loved ones don't have to go through some of the pain that a death brings. And the confusion around these types of assets can be really bad. So I'm Rob Satcham from feedbackwrench.com. Please subscribe to our channel. We appreciate your support, and hopefully your business can continue to head upwards and forwards. Thanks.